the previous challenge is we've coming off of 2 years, if not more, of like low rent growth and high expenses for apartment operators. We've got these looming loan maturities that are a big problem to a certain specific group of apartment owners and operators, economic uncertainty, high interest rates, and we're caught between this wave of newly built apartments and a sharp drop off in apartment construction, and rent growth is low. Yeah, we can hope for the future. We don't know what's going to happen, but we know in the past it hasn't been that great. Things are so cloudy. So we looked at things like vacancy, job growth, and apartment supply, and we've charted out how these individual markets will perform.
At least in this selection of markets, Kansas City's taking the top spot of projected rent growth for 2026, at least in the second quarter of 2026. The Great Capital Report is saying Kansas City is going to be growing rents by about 3.5%, followed by Tampa, Florida 3.2, Miami 3.6, and Seattle, Washington 2.68, Indy 2.59, then Philly 1.5, Columbus 1.35, and then in the negative, Denver negative half, Austin negative 1.25, and then Phoenix negative 2.4. That's rough. It's not an immediate correlation because, again, there's other factors, but certainly a big impact. The markets that have the most supply are seeing the largest declines.